You're listening to the M-Advisor podcast. I'm Paul Morton. M-Advisor helps physicians with their financial planning. This podcast is intended to provoke insight into your finances so you can learn, plan, and create a legacy you're proud of. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through Cambridge Investment Research, Inc., a broker-dealer, member FINRA SIPC. Advisory services offered through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and M-Advisor are not affiliated. You're listening to the M-Advisor podcast. The M-Advisor podcast comes out on payday, the 15th and 30th of each month. Today, we're talking about insurance proceeds, and more specifically, homeowners insurance proceeds, and even more specifically, roof replacement. It's springtime, and so in Oklahoma, that means we have lots of thunderstorms, lots of wind, tornadoes. We have lots of roofs that need to be repaired and replaced. Especially recently, we had something like 60 mile an hour sustained winds. And so lots of roofs were being replaced in Oklahoma. My roof had to be repaired, but not replaced. And typically, if you're just repairing a few shingles, that doesn't go through insurance because the cost of repairing a few shingles probably won't hit your deductible. Which brings us to, what is a deductible? If you look at your homeowner's insurance policy, you will have more than one deductible. You will have a general loss deductible. So this might be if you have interior items replaced in your house, or you might have mold or mildew or water damage, such as like a pipe breaking and there's floods and things like that in your house. So that will have a different deductible than the roof deductible. And so the roof deductible will go under the wind and hail deductible. One deductible, the smaller one, is for all of the general things, and then the roof deductible is the bigger one, and it's for the most part damage from wind and hail, but more specifically, it will be there to replace your roof. And so when you look at your benefits and how the proceeds are paid in your homeowner's insurance policy, there are typically, not always, but there are typically going to be two methods on how your claim will be valued, and then how you will receive your insurance proceeds, your insurance payments. So one is a full replacement. And if you have a full replacement on your roof, then that's a fantastic policy, but it's probably pretty expensive. If you live in a place like Oklahoma, it might not even exist. The other type of payment is ACV, which stands for actual cash value. And so the difference is that a full replacement will pay for the full roof, talking about a roof replacement on the wind and hail section on your homeowner's insurance policy. If you have to have your roof replaced and the new roof costs, let's say, $30,000, then the insurance company will pay for $30,000 minus the deductible. If you have the actual cash value, or the ACV, then the insurance company will value your roof. So if it costs $30,000 to replace, it's a $30,000 roof, and let's say it's 10 years old, then they would essentially price that roof as if they could send it to auction or as if it had some sort of depreciated value. And what is that roof worth today? What's your current roof worth today? And so it would probably be a percentage of that $30,000. So if $30,000 is what the roof costs to replace, then it might be, let's say, 60 or 70% of that roof. So let's say 70% and it's $21,000. So then they'll pay $21,000 minus your deductible. And what is the wind and hail deductible? Well, if we look at like car insurance and then the other deductible on your homeowner's insurance as comparison, these are stated in dollar amounts. Usually like $1,000 is going to be a normal deductible for that everything else clause on your homeowner's insurance. But the roof replacement, the quote unquote wind and hail deductible, is going to be stated as a percentage of the home value. So if you live in a house that costs or that's valued at $200,000, then the wind and hail deductible might be 1% of your home value. And typically the deductible is 1 to 2% of the home value. 1% is going to be a normal deductible. 2% is going to be a high deductible. At 1% on a $200,000 house, that's going to be a $2,000 deductible. If you have a 1% deductible and you live in, let's say, a $6,000 house, that's a $6,000 deductible. So if you have the ACV, the actual cash value on your wind and hail or on your roof replacement, and your roof costs $30,000 to replace, the insurance company might pay $21,000 minus your deductible. And so if your deductible is $6,000, the insurance company will pay $21,000 minus $6,000, which is $15,000. So then as you're replacing your roof, the insurance company actually pays half in this scenario, and you pay half in this scenario. And that is fairly common to have that type of ratio when replacing your roof. And sometimes the ratio will be a little bit closer to the insurance company paying more, and then sometimes it'll be closer to the insurance company paying less. Usually it depends on how old the roof is. So you can have a house that was built 60 years ago, but if you have a relatively new roof, then the insurance company, under that actual cash value definition on how they replace your roof or how they pay to replace your roof, they will pay more for newer roofs, and they will pay less for older roofs. Depending on what type of shingle material you have, it might be worth it to talk to your roofer, whoever's replacing your roof, if you have to have a roof replaced, and just ask them if that shingle that they're using, because the insurance company will only replace like for like. So if you have a kind of a not so good shingle that you're replacing, so it's not very strong, or it's not very hail resistant or wind resistant, then it's probably going to be replaced more often. So it might be worth it to ask the roofer what they think about that shingle material. Is this a good material? If yes, that's great. Replace it and maybe it will last 10 years, possibly. If they say it's not the best shingle, ask them what the cost difference is between that current shingle and the next side, the next quality up, or the higher quality shingle. That difference of cost usually isn't that great. The insurance company will pay to replace a like-to-like shingle. But if you upgrade to a better shingle, then the insurance company won't pay for that upgrade. But sometimes that upgrade is fairly cheap for this size of project. Let's say a couple $1,000s. And that higher quality shingle will most likely last longer, making that couple $1,000 expense save potentially significant money in not having to replace a roof for a much longer amount of time. And then moving forward, the insurance company will then pay to replace that type of shingle, that upgraded type of shingle. So that's at least, in my opinion, a conversation worth having with the roofing company, especially if you've found yourself replacing your roof every few years, which unfortunately happens if you have a lower quality shingle. So as it's springtime and roofs are being replaced, this is a good review and a good overview on how the insurance company is going to look at your roof. And then just a couple questions to ask your roofer as they're putting the new roof on. Make sure that you have a good roof that will last a long time and will potentially save you lots of time and lots of money moving forward. Thank you for listening. I'm Paul Morton with M-Advisor. M-Advisor helps physicians with their financial planning. You can visit m-advisor.com for more information. And you are listening to the M-Advisor podcast.